Curtis Arnold is a North Little Rock-based consumer advocate and educator on credit card debt and personal finance. His new book, The Complete Idiot's Guide to Person-to-Person Lending, which we're going to get to in a minute, focuses on the world of social or peer-to-peer lending. It's good to have you back on the program, Curtis.
Thanks. Good to be back, Ruby.
Let's talk about what's happening in the world of consumer debt right now. Statistically speaking, we're seeing consumers spend less, save more, pay down credit card debt, and we're told this is not a good thing for the economy. Is it good or bad?
Well, yeah, we're told one of the solutions to getting out of the slump we're in is for consumers to go out and start spending, and that would include spending on credit cards. I would argue that that is one of the main reasons that we've had the problems we've had in terms of this incredible consumer debt load that we're taking on as consumers. You know, there was a study that just came out earlier this week by a nonpartisan group in D.C. called Demos, and they showed credit card debt among senior citizens 60 or above has skyrocketed from 2005 to 2008, 25+%. Crazy numbers. I mean, and these are folks that they're not going out running up their cards at the mall. They're using their cards for medical bills that they can't pay for necessities like food, gas, clothing. And credit card debt, I mean, among seniors, it's over $10,000 for seniors that have credit cards. And then for the rest of us, it's continued to tick up about 3%, not the 25%. Yes, we are saving more, and that is helping our overall consumer debt load to fall, but we're still at crazy numbers. And so any kind of savings, I mean, there wasn't too long ago, Roby, that we as a country had a negative savings rate. Scary stuff. At least we're in the positive territory and we're heading in the right direction, but I can't help but think that's a good thing. I'm sorry. Call me contrarian, if you will.
And no doubt any banker that you talk to will tell you that they have tightened up their lending processes. You need better credit, you need more liquid assets, and a decent history of paying back the bank if you want to borrow money. Your new book, The Complete Idiot's Guide to Person-to-Person Lending, is about a new wave of borrowing money. I want you to explain the concept.
Yeah, this is a kind of a new take for me, new direction, but it's not a big stretch because this is a fascinating field. It's called social lending. It's kind of like lending between friends meets Facebook, which sounds like a crazy concept, and it is out of the box, but hey, it's viable and it's working and it's taking off. The concept is simple. You lend money to, let's say, a friend or a family member or even a stranger. Historically, lending money, getting money from Uncle Harry was probably not oftentimes a good thing and can actually end up ruining a friendship or a relationship. But the new twist is they leverage the power of the internet and make these loans more of a formal type arrangement where you actually have a loan document that you sign, a promissory note, and it's very cool. I have personally done several of these loans to friends. Here's the concept. You cut the banks out of the picture. I've got, as say, I'm an investor, so I want to lend money. I can park my money in a savings account and earn 1 or 2% tops, or I can lend money through one of these social networks such as Prosper.com. It's one of the big sites, LendingClub.com. And the return, and they've tracked this, outside companies such as Javelin Research, the return on money invested through sites like Lending Club over a 2-year plus period is over 9%. Unbelievable. That's an average return, by the way, Roby. So that suddenly becomes much more appealing. I don't want to play the stock market right now. I don't want to get 2% or 1% of my savings. So from an investment standpoint, very intriguing concept. From a borrower standpoint, let's say the credit card companies are jacking my rate. I've tried to negotiate. I've got on cardratings.com, tried to get a lower rate. It hasn't worked. Where do I turn? My local bank won't lend me money. Well, social lending, peer-to-peer lending, is a viable option because average loan rates, these networks, are lower than average bank rates when it comes to loans. So what I've done, a friend of mine, for example, had credit card debt at 19%, 18%. And I said, well, hey, I would rather get a better return on my money. Why don't I lend you? And I felt comfortable doing this. It was a friend. I knew they had a good job, proven track record, known them for years. why don't we consolidate your debt at 7.5%? You lower your rate by, over half. I get much over double, really triple what I would get in my local bank. Suddenly it becomes a win-win situation. That gets my blood flowing. It's kind of the power to the people concept, and there's this real human element to social lending where you can post your story. You can, and you go to a bank, a traditional bank, and not to get on local banks at all, but a lot of times there's not that human element, particularly the bigger banks, that you would have with social lending. You can post a photo, you can tell your story, and not everything, Roby, is going to show up in a credit score. There's some good potential borrowers out there that are good people that maybe have got some medical debt that resulted in their credit score plummeting. So you can't tell the whole picture with just a score. And unfortunately, in a lot of our lending environments today, you judge a person strictly by that 3-digit number, and that is not always right, in my opinion.
Yeah, tell me a little bit about the regulation of this peer-to-peer lending, because clearly there could be some dangers in this type of practice. There's not a government guarantee or regulation over these types of transactions. I mean, what's to prevent some guy named Vinny coming to your house and saying that you owe him big time?
Well, risk, there are risks inherent to this, and it's not, government-backed. So you have to be careful. And so that's why the Complete Idiot's Guide to Person-to-Person Lending, doing some due diligence, some homework, and really, if you're wanting to lend money, you can screen out potential borrowers. You can screen them out by their credit profile. You can screen them out by their what's called the debt-to-income ratio. So there's different ratios. It's not brain surgery, but you do want to do some due diligence. Fortunately, though, the SEC has come down, and a couple of these sites actually have gotten SEC approval, Lending Club being one of them, and Prosper. Some of these sites are in what's called quiet periods where they're under review by the SEC. But basically having that oversight in terms of them treating these investments sometimes as securities, because sometimes some of these sites have gone to a situation where if you, let's say, lend money to several different people and then you want to resell your loan almost like a portfolio, you can resell those loans, which in that you're getting to more of an investment type scenario. So having this SEC oversight, which what we have on two of the big players, is a huge step forward. And I think, again, not that it's guaranteed, not that it's without risk, you can lose all your money. But if you do a little bit of homework, you get familiar with the space, it's not brain surgery, you don't have to be a loan officer to make this work. The New York Times recently had a piece where a gentleman loaned $600,000 through these various social networks, and he's very happy, and he's getting those kind of 9, 10, 11, 12% returns on his money on average. So what you do is you diversify your risk like any other investment. Actually, the smart thing to do is, instead of, let's say, you're looking at different loans, people asking for money, you would diversify and you got $10,000 that you would want to loan, you would put $50 on this loan, $50 on this loan, and so buying lending to a small portion of that loan, $50, $100 increments, is a way to diversify. And so suddenly you've got $10,000 to invest. Instead of loaning that to one person, you're loaning it to 100 persons and spreading the risk out.
All right, Curtis Arnold, he's the author of The Complete Idiot's Guide to Person-to-Person Lending. He also operates the website cardratings.com. Always good to visit with you. Thanks for your time.
Hey, thank you, Roby. Thanks.
We're back with more right after this.